So Vanguard is getting a lot more active. The investment giant known for its low-cost passive index fund investing has just launched several new investments under a new actively managed umbrella. In fact, they're so new that the website doesn't even have a lot of key information, so I thought I would do the digging for you and let you know all of the important details. I'll cover what the funds are, who they're aimed at, and what they hold, including making sure you know what costs are involved as well. The new funds, which are now live on the website, are called SustainableLife, and they come in several different options, aimed at investors depending on the level of risk they want to take. The new funds are the following: Vanguard SustainableLife 40 to 50%, the Vanguard SustainableLife 60 to 70%, and the Vanguard SustainableLife 80 to 90% equity fund. All of these funds can be found in the blended section of the website. If you scroll past the life strategy and target retirements, you'll see them listed here. And then finally, to top things off, the Vanguard Global Sustainable Equity Fund, which is 100% of equities and has no fixed income or bond products. This one is not sat in the blended section of the website and it actually sits under equities under the global header, which is shown for you on screen now. The main focus of these funds is on ESG, which stands for environmental, social, governance. Essentially, the funds have been created to only hold shares with companies which uphold high quality values. What this means in reality is that any company that operates in industries that maybe have any kind of negative effects on society or the environment are not included. So the kind of companies we're talking about and those which get excluded are anyone in the tobacco industry, any of the oil producing super majors, any company producing weapons other than Nerf guns, and any company still involved in the burning or distribution of coal. One of the main goals is that any company that these funds invest in has to be committed to having a net zero carbon emissions by 2050. It's all peace and love here, guys. In their own words, here's what Vanguard say about this new range of funds. Firstly, they're balanced portfolios, at least 3 out of the 4 who use bonds, meaning that you'll get some income growth regardless of how well the stocks perform on their own. Secondly, they invest in companies that will also be paying dividends. This typically means that the companies will be large, well-established, consistent players regardless of the economic climate. And finally, they're aiming for growth potential whilst being conservative at the same time. But you get the picture. But why is ESG investing so popular now? Well, I don't think it's all because Vanguard want to be tree huggers. There is money to be made here too. The ESG market has exploded over the past few years. Just take a look at a couple of these figures. Sustainability themed investing has made an astonishing growth of 605% to reach nearly $2 trillion worth of assets from 2016 alone. And ESG integration has also shown a prominent growth of 143% from 2016. This brings the total value of the market to around $25 trillion. It's definitely big business, so where there's money to be made, you can definitely expect fund managers to follow, especially if they can charge more. Also, investors are now being a lot more savvy and less happy to sit back while their passive portfolio still pours money into big, dirty businesses. Don't forget that one of the most popular Vanguard investments is their life strategy range, which has investments across every sector and every large business in the world. This range aims to capture those people, just like they want to capture the carbon out of the atmosphere and put it back into some lovely flowers. Right, so what's in this fund and how much is it going to set you back? Let's take a look at this now. As I said before, we've got 4 different funds in total, 3 of which have bonds in and 1 is just pure equities. The ongoing cost for these funds is 0.48%. To put that in perspective, when compared to the life strategy range, for example, that's more than twice the amount you'd pay at 0.22%. In fact, it's the priciest fund range on their entire platform on their UK site that I could find. To give you some context, if you were to invest £10,000 over 10 years in this fund and you got 10% return per year, you'd have £27,070. Removing 0.48% of this every year takes your total down to £25,811. So about £1,200 across 10 years or £120 a year. Still though, in the grand scheme of things, this amount of charge is pretty still low when compared to the rest of the market in actively managed funds. Especially in a market where lots of fund managers still charge nearly up to 1% to manage your money. And some charge even more. Look out for these fees, they can be a massive drain on your investments. Looking at what this fund actually invests in, we need to do some digging around as not all of the funds on the site actually have all of the information laid out. Jumping into the SustainableLife 60 to 70% fund, we can gather this information though, all of which is available on the website. I'll leave a link in the description below for you. One thing to note here is that this fund is actually being managed by Wellington, who are a company that Vanguard have partnered with for all of this ESG investing. From the top then, let's run through. We've got 86 different companies inside the fund, a median market cap of $77 billion, meaning that we're only going to see large companies here, not anything small or speculative. These are going to be cash generating businesses, unlike some hype stocks. Looking at locations, no surprises here, you'll mainly be exposed to the US market with just over 60% of the fund holding companies based there, but you also then get exposure to Europe, Pacific and emerging markets too. So you are getting good diversification here. In this example fund, don't forget that you'll also be getting some income here too with the use of bonds, which look to be mainly highly rated, safe government bonds, as you can see here from the credit rating and the list of holdings. In terms of the kind of companies, let's take a look at this now. In the top spot for this fund, we've got AstraZeneca, the pharmaceutical giant and the largest constituent of the FTSE 100 here in the UK, followed then by companies like Microsoft, Johnson & Johnson, Bank of America and Cisco. I don't see any Apple or Google here, which is interesting. Nothing from Facebook either, but I did find a small holding of BAE Systems and Lockheed Martin. So surely that must be a mistake. I think there might be an out-of-date list on their website for an old Vanguard Global Balance Fund. Anyway, who knows? Well, let's hope it is, as I don't think BAE Systems and Lockheed Martin have now become some sort of players in the sustainable green energy, unless I'm wrong. One thing to also note in this fund is that you're going to get a small dividend too with 1.3%, but it will be reinvested automatically because this fund is an accumulation style fund, meaning that everything earned is reinvested. If you do want any cash from it, you'd have to sell down your holding to get back any cash, especially if you were looking to use this fund to live off and retire from. Anyway, that's everything you need to know about the new Sustainable Life Fund at a high level. Please let me know below if you're going to be investing in this or you're very highly skeptical of all of these new ESG funds who just look like you're paying higher fees for basically the same set of companies and a lower return than the wider market. I'll be interested to see how this market grows as we move forward. How many more people will choose actively managed ESG funds over the trusted old passive ones that Vanguard themselves have been so successful at bringing to market and making their fortunes from. If you want to learn more about the different Vanguard funds, I'll leave a link in the description below that goes through all of the different fund options on the investing platform itself. And I also have a user guide too, which will help you get set up with the Stocks and Shares ISA if you haven't already. You can also follow my own portfolio progress too with my Vanguard update series, where I invested £10,000 into my Stocks and Shares ISA. Again, that will all be in the links in the description. Time will tell how it goes. Anyway, thanks for watching, getting this far. Drop me a like if you've enjoyed the video. Subscribe for many more if you're not already. I'll see you guys in the next video. And as always, happy investing.